So there was a massive rejection from Bitcoin in the early hours of yesterday evening. So looking at this, you can see on the weekly chart, it's pushed directly off that 255 MA, and there is a lot to consider. But what's going on with Bitcoin is not my major concern. It's actually what's happening with the stock market. We did speak about that so-called kiss of death, which has now officially been confirmed. So what is this going to mean for the crypto market leading into the end of this week and into the new quarter? Well, we'll have a look at that today. But first and foremost, let's start off here just on the weekly chart. You can see that this 21 EMA, which has worked fantastically well, is increasing its gradient to the downside. You now also have the 200 EMA, which is the white one on the weekly chart, is starting to turn over. So that's not a good sign. And I have mentioned to you guys many times before that you don't want this purple 200 MA. Historically, for many asset classes, the 200 MA on a weekly chart showing the long-term health of a market is very important, that price holds above that and that it stays in an upward trend. So we need price to capitulate before then, and we're very close. I mean, when you consider current levels down to around the $16,000 horizontal area of interest is only about 13.5% down to the key yearly low is 26% down from current levels. And as I'm sure many of you know, this is not out of the realm of possibility for crypto to hit those kind of levels and very quickly bounce from that zone. So if that were to happen, this is definitely your buy zone. And I have mentioned to you guys many times before, use the Bitget link below and use that grid strategy. That grid trading strategy is phenomenal on spot orders to get all your orders in the event of a capitulation. Any exchange that you're using for that money, if they don't have a grid strategy, you might have to manually enter. But preparing to buy the dip right now is probably the smartest thing in my personal opinion, because the markets have been hit really hard, and it's not unreasonable to think that in the next 3 months or so, at the very least, there should be some massive bear market relief rally. So keeping an eye on this. Look, spent a lot of time underneath these 255 MAs and the 200 MA, and it's not looking good, at least for the bulls. And then here we have it. This is the stock market one, which has the 21 EMA, the yellow one, on a monthly chart. And I mentioned to you, you have to set an all-time high. Price sells off below that 21, sets a low, which we did in June, pushes back up, rejects off of that 21 EMA, comes back down. And once you break back below the June lows or the previous lows that were set, which is our critical line over here, we have punctured through that, and that means that a new low has been set, and that's confirmation of the kiss of death, which brings in much lower target levels. So looking at this chart over here, you have MAC 10. MAC 10 is showing over here that bulls, you'll be happy to know the Fed doesn't feel your pain. Their financial stress has been declining for all of 2022, an unfortunate consequence of confusing default risk to inflation risk. So if you have a look at this over here, the red indicates what is going on within these levels. If you look at the red chart over here, this shows the Fed's financial stress index, and it's actually at one of the lowest that it's been, indicating that they are not concerned at all with what's currently going on, and meaning they're probably not going to pivot anytime soon. Okay, looking at ALF, he's showing in relation to the broader scheme of things and what's going on, some historical visual context for the 2022 equity market. And we are currently here where the red line is, and fair value would bring the low targets to about 3,500 on that S&P 500. So I'll show you in a moment what that looks like. Let's just quickly let that load up. It's a little bit slow there for some reason. Okay, there we go. So if you have a look in relation to the previous major crashes that have happened, I would say that we're probably closer to that 2008 one, which is going to be the light gray. 2007 to 2009 is this one over here. And if we pull that up 3,500 as a target, we are getting very close. So this would be within the realm of a bouncing area. But with this level cleared now, the question is, do we bounce from here? Because the way that institutions and big players think is they will be always targeting liquidity. So the previous lows over here will have some liquidity that's been lying there, and now prices hit this area. My answer to that would be, if you don't see this week or this 3-day chart at least get left behind with the wick over here, if this doesn't start to move very quickly to the upside, then it's probably just going to be continuation to the downside. And I think that within the space of a week or two, it's very reasonable to think that you could hit those ultimate levels, which is where the main area of interest is, personally speaking. TED Talks shows over here that either there's two scenarios, right? Either A, Bitcoin has decoupled from traditional finance and is holding this area very well, as traders see it as a significant value zone, or B, Bitcoin is due some serious downside to catch up with the bond market and US equities, which is quite scary. I mean, I think that you have to side with B, that Bitcoin and the crypto market has just been slightly lagging. These are inverted, by the way. So if you see the purple for the stock market and the 10-year yield, that's going up. The 10-year yield is the way that it's supposed to be. The NASDAQ has been inverted. And as you can see that historically, they've tracked almost in exactly the same way. And Bitcoin has not had that final move to the upside. In other words, it would be to the downside, since it's an inverted chart. And this could be the start of that. This is all a good thing, guys. We want this to happen. You want the final flush to take place to reset the market. You need all leverage traders to be capitulated out of the market, funds to go broke. It's just the nature of the game and how things tend to play out over time. So there is potentially something big coming up. If you do look at this from Will Clemente, it shows here that Kraken CEO stepped down, FTX US president stepped down, Alameda Capital CEO stepped down, MicroStrategy, which is of course Michael Saylor CEO, he stepped down. And then yesterday we had Celsius CEO stepping down. Who's next? So they are dropping like flies, and it is quite concerning. It makes me wonder, this is pure speculation, if it has anything to do with the upcoming regulations. Yesterday, Fed Jerome Powell did speak on the matter, and they had those EU guys as well. I don't know their names by heart, but essentially what they were saying is, some of them came in like all guns blazing, fist flying, saying that crypto is not good. We don't want it. We do want a stable CBDC coin, and we want our own coin that we can govern, which would be highly regulated and extremely transparent, meaning that you have very limited privacy. So it's interesting times ahead. There's that saying that first they laugh at you, then they fight you, and then they join you. And I think we're kind of only just entering that phase of then they'll fight you. And I'll just be looking to the charts for my entry point, because there's too many things that go on fundamentally to make that decision. And I'll wait for an uptrend to be established before I get major positions entered. So looking at this chart over here, I did say that the potential higher upside target would be this 21.7, and that would still be bearish unless you start to clear this level. We didn't even get that far. Price started to sell off already at 20,400. And I'll show you on the low time frame. I think we missed where I was looking to go short from by literally a few dollars, which is okay. It's fine. But nevertheless, this is a bad looking candle. If this one follows through and you start to take out these lows on the 3-day chart, then you can expect major continuation rapidly towards the downside. And I did mention to you that just putting this on a line chart, you do understand that this is still many lower lows on a closing basis, which is overall a bearish picture. So hopefully none of you got caught out. On the Gaussian channel, rejection from the bottom side of the Gaussian channel came back down on Bitcoin. What about the daily chart here with the super guppy? Similar picture. This will be increasing with strength to the downside, and that Gaussian channel will be expanding out, showing that there is going to be maturity to this move coming over the coming days. What about this chart over here? So this on a closing basis. And this is why I say to you guys, you have to focus on the closing candles. The closing candles are vitally important, because this candle has now just been left as a wick, which is a straight rejection from all of those different EMAs. It even rejected, if you have a look over here, from the 9, one of the lower EMAs, it's rejected off that as well. All of them are angled downwards, and I would expect continuation on this chart as well. We didn't even make it to that diagonal support. What I would imagine is happening over here is that big players probably front ran the retail, because most retail are probably looking to short directly off of that trend line, but they pulled the trigger a little bit sooner than that. So is what it is. It reminds me yesterday when the way everyone was acting, looking at this tweet here, me showing my wife I'm up 1% today after being down 50% for the year. And you can see she doesn't look very impressed. And that's the case, guys. Like, I mean, it's not worth it to me to depends on your position size, I would say. But if you're risking, for example, tens of thousands of dollars on being stopped out for a small potential little bounce, it's not really worth it, right? Like, I'm more personally a swing trader. I want to position myself with big moves and get the main meat of the move, like hold it for long periods of time. I'm not too worried about 1, 5, even 10% moves to the upside. So if you are a short-term trader, you'll be more focused on these low time frame charts over here. And looking at this one on the 4-hour chart, you can see that it is still holding this descending triangle. It's not a perfect descending triangle, but nevertheless, it is still showing that there's distribution with low highs, flat bottom, and eventually this flat bottom will break. Momentum oscillators are reaching towards the downside over there. So I wouldn't be surprised to see one more attempt at an upside move over here. So it would be a very, very easy setup over here if you were going long as a range trader. I'll show you on my low time frame chart, but essentially it'd just be targeting basically where price started to sell off yesterday. If there was some sort of a bounce, it's going to probably get up to that zone over there. So talking to the range traders now. So as I just mentioned, let's have a look at this chart. This is kind of the way that you would want to play it if you were looking to go long. It's probably going to give you like a risk to reward of about 1 to 4, I would assume. Let's grab this tool over here. So you'd be looking for something like this. You'll be targeting to about that level over there. And I would say your stop can pretty much go just below the low that we've just made. So if this low gets taken out, let's zoom in over there. This is kind of your entry. This is the way that I would play it. I'm not saying that I'll have a look at the market later. I just think that the stock market would probably continue to the downside. So this wick that you have over here, you want your stop loss just below that. Entry point is pretty much right where we are, and I wouldn't target all the way to the very, very top of that, but probably to where the this candle closed and the next one opened and immediately came to the downside. So that's giving you a risk to reward ratio of almost 1 to 5. Not a bad long trade. If you are looking for a scalp opportunity, that's your opportunity right over there. What about on this chart over here? Let's have a look. So yesterday I did outline using, let's quickly put that on, the fibs over here. And this is what we were looking at. I said I'm anticipating a potential push into this area, and then I'm going to look for signs of weakness, and that would be my short zone. And you can see that it just missed that. I didn't take the trade. I wasn't sitting watching the charts while this happened, so I didn't make this trade. I missed it by like what? Literally about 0.5% over there. But I was tracking this once it did start to sell off. I had this trend line over here, and look at how quickly that thing went to the downside. As soon as it broke that and closed and opened a new candle underneath, it was straight to the downside over there. So guys, that's about all that I have to say. Risk remains to the downside. Price is stuck below the 2017 highs yet again. What about Ethereum? Let's see in relation to its 2017 highs where it's at. Quickly open this up. All right, our internet is quite slow today. I do apologize. So this one is quite a way away from its 2017 highs. This price action that we had yesterday, that was a perfect example of a deviation over there. It came straight above the 2017 highs like that, failed to hold, deviation confirmed, and straight down. So interesting, a lot of pressure to the downside for all crypto assets. Very short show for today. Not much more to update. Just waiting for the final move down. And what did Dean say? When do you think you'll show another trade on Discord? I was hoping to give the other trade yesterday on Discord, but nothing became present. I wanted that push into the towards that golden ratio on the fib retracement level, and it just missed it. I was looking to go short there, so I do apologize. I could give a trade pretty much right now. As soon as the show's done, it'll probably be something along one of those scalp longs like I just showed you. But for big traders who are looking to trade massive swing positions, that's probably not the trade for you. Remember, we've tested that horizontal resistance so many times now, which means that risk is definitely to the downside. How many more little longs can you squeeze off of that range low? I don't think too many. I think that thing's going to break pretty soon. So, guys, with that being said, I just wanted to touch on some admin things here quickly. First and foremost, there is a cool incentive for those of you who have never traded ByBit before. If you look in the link in the description below over here, you get a $1,000 bonus. James, how much was it that they get to trade with? Do you remember?
Yeah, I get $100 from them, and at 10x, it's a $1,000 position on ETH.
Okay, so you get a $1,000 position on ETH. This is if you've never traded futures, so you've never leveraged or margin traded on your ByBit account. If you don't have a ByBit account, then this is also for you. All you need to do is use the link in the description below. They're giving you a $100 sign-up bonus. So if you haven't traded yet, sign up, open up the leverage account, and then you would need to, I believe you need to deposit how much money, James? $1,000. Yeah. So you would need to deposit $1,000. Then you use the claim link, and then you don't need to use your $1,000. They'll give you another $100 on top of that to trade ETH, and you can go 10x on that. I think you have to use the 10x option, and then you get it's a free ride, right? So whether you lose or win, doesn't really matter. You don't lose anything. And then the other thing I wanted to touch on is Bitget over here. There is a sign-up bonus of up to $8,000, and you get 15% discount on trading fees. If you're not already with Bitget, sign up. They're an awesome exchange, and we are going to be running a co-competition between Bitget and ByBit. That is coming up, I believe, in about just over a week. It's about 7 to 10 days, but registration will begin soon. So that's it from me, guys. I hope that you all enjoyed this video. If you did, please make sure that you hit the like button. If you dislike it, then hit the dislike button twice for me. Hit the bell notification, subscribe to the channel, join the Discord if you're not in the Discord already. And that's it from me. I hope that you all trade well out there. I appreciate each and every one of you. And until next time, I'll see you all on tomorrow's video. Cheers for now.